Hey guys, how's it going? And thanks for coming. I'm Nick, and this is Real Life Money, where we talk about real life and money, because you know schools aren't, so let's get started. So stuff was hitting the fan on Friday, guys, and when I'm saying Friday, I'm talking about February 2nd. Everything in the market basically was down. You could see on just Friday alone, it was down 666. What, Satan? But everything, this shows you the Dow, I'll show you a bunch of other things, but everything was getting slammed Friday. So what's going on? Could this be a correction? Could this be the start of a crash? People are losing money. So should we be scared? Now, let me point out a couple things why there were just huge movements on Friday alone and kind of toward the end of the week. The first main thing why everything was moving around was earnings. Huge companies were reporting earnings. You could see here Apple just dropped just like everything else on Friday because their earnings were coming out. And there were a bunch of earnings. You know, there was Amazon earnings, there was Google earnings, and a lot of those companies got hit. I think one of the biggest stocks that actually didn't go in the negative was Amazon, just because you could see that huge jump on Friday, just because their earnings were so good. Their numbers are just incredible, guys. Amazon is an amazing company. They keep just outperforming everything. So it did jump and it did decline, but just because their earnings did so good, they still ended up being positive. So along with earnings, there were also job reports. So because it was the first Friday of the month, and this happens every first Friday of the month, they repeat or present job reports and job numbers and everything for the economy. Are there more jobs? Are there less jobs? So that usually moves the market a bit as well. So we had earnings going on, we had job reports going on, and we also had the moving of U.S. Treasuries. So when interest rates increase, and they are projecting that they're going to increase interest rates at least a couple times in 2018, as interest rates for bonds increase, that makes it a little bit more attractive for bonds, because bonds, they are considered less risky. So for the past 8-9 years, guys, people have money in savings accounts, and savings accounts gave you no return at all. It was like 0.05% interest. So why should you leave it in a savings account? Where else could you put it, right? Bonds weren't really giving much. They were maybe like 2, maybe pushing 3%. I don't even know, because I don't even look at bonds. So a lot of people were getting into the market, right? Because that's only the real returns that people could get. So with bonds having a little bit more return to them, people might look at bonds because they are a little bit safer and they have at least some type of return now. So people could be getting out of the market and getting into bonds. So that's another issue. So there could be seen as a bunch of problems, right? Maybe if earnings aren't producing as much as people want, if jobs aren't coming back phenomenal, or if, interest rates are increasing, so bonds are looking more attractive, or anything else. But in my opinion, I'm not scared at all, guys. This is a pullback. There's no doubt about it. People lost money. But pullbacks are healthy for the stock market. Now I'll show you other companies as well. We can see like Google, even Exxon, just to diversify in other industries. Everything dropped. But let's take a step back for a second, guys. I'm showing you a chart for the past year of the S&P 500. Basically, any large company is in this. But look at that. That's just basically all up. Like every single month last year was positive. So the stock market, there can't be only ups every single month just forever. There has to be some type of downs. And this is one of those downs. This is why a pullback is actually healthy, and I would like more of this. This is seen as good to me and to a bunch of other investors, because now stocks are slightly on sale. Why would you want to buy an expensive stock? Now they dropped a bit and they're a bit cheaper. So it's just like a sale in a store. Why would you buy sneakers at $120 when you could get them for $100? Now, people are talking of a stock market crash. By the way, this wasn't a crash. The Dow was down 2.5%. You know, other companies might have been down around like 5%. That's not a crash at all. It could be much worse. A crash is like 20, 30, like multiple percentages higher. A correction could be maybe around like 10%, maybe 5%. So we're more of like a correction pullback and not a crash. You know, it might be a start of a crash and we could be going into a correction. But again, like we just said, I would encourage that. So what should you do? You know, you see a bunch of these companies as well. I know PayPal was a hot stock last year. Even Johnson & Johnson, you know, that's a safe company and they still got slammed. So what should you really do? Well, I would definitely first look at your risk tolerance and like, are you not going to sleep at night if you lose money? And if you will lose sleep or if you are bothered by it, then you might want to get out a little bit. But if you could kind of stomach just the idea, and listen to me on this, guys. Obviously, no one wants to lose money, but stocks, look at the history, has always rebounded. So if you're strong enough and could take a step back, everything's going to rebound, everything's going to continue to grow. It might take a while to rebound, but it will. And just remember, these are actual companies. You know, they're just not numbers that could just go to zero tomorrow. Apple isn't going to go bankrupt anytime soon. So if you think, you know, buying Apple now is very, very risky, not so sure about that. Apple's a huge company selling phones like crazy, and not only phones, they have so many different businesses and services. So a lot of people would actually suggest, as will I, as buying this dip. I myself are thinking of getting into these things that did get hit, more on the safer side. Like Apple is a safe company because it's huge. So I'm actually thinking of getting into Apple, another safe company like Johnson & Johnson, stuff like that. But what if it continues to go down? And there is a strategy out there is to continuously buy small amounts as it goes down. Remember, it is very, very, very difficult to time the market. Just to know when the absolute bottom is, get in at that point, and then just go up during the rebound. So instead of trying to time that, which many people cannot, you buy small increments as it goes down, and then when it rebounds, you could continue to buy things. But when it rebounds, you make that money back, and you actually make more than that. So if my words help at all, whether they do or don't, I don't know, but from my opinion, I say to not worry about it. This is actually a healthy thing. If anything, it's a good thing because now good companies are on sale a bit. So I would say hold it and relax. Especially the companies with dividends. If you have a dividend company, like Apple has a dividend, like I said before, Johnson & Johnson, a bunch of companies have dividends. So even if they do continue to go down, they do still give you a dividend. So that's a little bit of an upside as well. But that's kind of it. I kind of just wanted to put some positivity out there because it's not like the end of the world. This isn't a crash. It's more of a pullback, could be a start of a correction. What's going to happen for next week? I have no idea. No one knows. It could continue to go down. There are still other companies to report earnings, so we'll just have to be patient and see. So guys, if you have any questions, comments, concerns, please leave them down below. I'd love to hear what you guys have to say, what you're thinking of this little pullback. Are you scared that you're losing money? Should you pull out and just move to another country? Tell me what your thoughts are. And don't forget to subscribe to my channel, Real Life Money, where we talk about real life and money, because I believe that we could get a hold of our money, guys, and stop following the man. So thank you so much for watching, and I'll see you in the next one.